Hello and welcome to Crypto Weeklies. Today we are going to discuss Quant and conduct its machine learning based price forecast, its analysis, the regression based analysis and accumulation strategies. None of the content is financial advice. The chart that you are seeing on the screen is the TradingView weekly price action chart for Quant and its token QNT. The key idea or the key things that I wanted to show with this is the relationship with the current price and the 200-week moving average as well as the 300-week moving average. The price currently is below the 200-week moving average, typified by the color code change from blue to orange, and as well as the 300-week moving average. You can see over here the 300-week moving average. It's just starting to begin because Quant is not that old of a token, and you can see the price is below the 300-week moving average, typified by color code changing from green to red. So that's where we are with Quant. The other news related to Quant is there has been a surge over the last 24 hours. The token has grew by about 19%. It's still one of the top 100 cryptos by market cap at around 71, market cap at around 840 million, circulating supply at around 12 million. And over the last 7 days, the rally has been at around 13%. And this particular crypto does have a max supply, out of which around 81% is in circulation. So that means the impact of any token based unlocks would be minimal from this point on in time. You can see over the last 1 year or so, the difference between the price growth or decline and the market cap growth or decline has been more or less the same. If you toggle between the price chart and the market cap chart, they're essentially the same chart. Now with all of this covered, we'll briefly look at the machine learning or AI based price forecast for Quant. This is our website, cryptoweeklies.com, has all the data related to most of the top 100 cryptocurrencies related to their machine learning and data science based models. The Quant price forecast per our model is right now at a base case between $56 and around $68 towards the end of the year. That was the base case, but now you can see that the price action is over $69 at this point. That means that base case has been invalidated. The purpose of this forecast is not to tell what will happen tomorrow, but be prepared for the three potential scenario. If my market goes sideways, goes up, and goes down, what are theoretical ceilings and what are theoretical floors at 1 standard deviation, 2 standard deviation, 3 standard deviation accuracy. This is the 1 standard deviation model. Per this model, the price action could be between $65 till about $115 at a weekly average level between now and end of year 2024. The downside is between $35 and $52 between now and the end of year. That means to summarize, the bull case is about the current price and a 2x from the current price. The bear case is at around half the price of the current price, at as low as half the price of the current price of Quant, and the base case is between the $58 and about the current price, which is $69. If you are interested in looking at in a tabular format, this is the base case in the middle. To its left are the three bear case at 1 standard deviation, 2 standard deviation, and 3 standard deviation. Similarly to the right are bull case at 1, 2, and 3 standard deviation respectively. The 2 standard deviation bull case is between $72 and around till the end of year is at around $183 for Quant. That's a bit further away from the current price action moment. If we see that the token continues to have a bullish rally throughout September, then we can further discuss the 2 standard deviation case as well. Now that we have covered the machine learning based forecast, the regression based analysis is the next component of our analysis. This is the polynomial regression function wrapped around the weekly price action of Quant. The weekly price action is in white. The base case or regression function is in pink. On top of the base function, there are three standard deviation lines to the upside and 3 standard deviation lines to the downside, namely the 1 standard deviation ceiling at yellow, then 2 standard deviation at orange, and 3 standard deviation at red. Similarly, 1 standard deviation bottom at light green, 2 standard deviation dark green, and blue is the 3 standard deviation. The thesis for Quant has been that whenever the price action is below the 1 standard deviation line, that has been a great time to enter. That is, the last time we visited this was back in May of 2022. Right now, the fair value for our model is at around $65 to $68. The weekly average price is slightly below that at around $58. Now the current price is at around $69, but that has not changed the weekly average price that much yet. But the key idea or the key levels to watch are the 1 standard deviation ceiling and the floor. At this point for Quant, they are coming in at around 1 standard deviation ceiling at around $117, the 1 standard deviation floor at around $38. Pretty similar to the machine learning based price forecast, when that is those forecasts towards the end of the year, price action likely being between the current price, the half of current price, and the 2x of the current price. Those are the regression based analysis as well. And if we were to utilize these models to accumulate Quant, the first model is the shorter term simple moving average based risk level based model. For this model, which calculates the current price and the proportional difference between the price and the 20-week simple moving average, and normalizes that difference between 0 and 1 in terms of the risk levels. For this model, the risk level to accumulate Quant is at around 0.31. That means it's the third best time to DCA Quant. You can see most of the bear market Quant did spend on this risk level. We are at the bottom end of this spectrum towards the 0.31 risk. In terms of the second model, which is the dollar cost average or proportional difference between the price and the fair value polynomial regression function, for this model, this is the second best time to DCA Quant. You can see the current risk level as late as price action as yesterday is at around 0.14. That means again, not the best time was when the risk was between 0 and 0.1. You can see this was the best time to DCA the model. This is the second best time to do dollar cost average for Quant. In terms of time weighted average price, again, this is one of the longer term accumulation based model. The key idea with this is whenever the price is lower than the time weighted average price, which is at around $69, that's a great time to DCA Quant. Again, the current price is quite similar to the time weighted average price, but you can see that currently the risk to accumulate Quant is essentially 0 if you have a longer term time horizon. So just to summarize everything, the TWAP says the lowest risk, the DCA model says the second best time to DCA Quant. The third model that we shared, the SMA model, this third best time to DCA Quant. So again, if you normalize the behavior across the three model, again you could come up with an average accumulation score at around second best time to DCA. The regression based valuation and the confluence between these valuation and the AI based or machine learning based price forecast, the key levels per these model is the $35 to $38 to the downside, the current price being the base case, and the one standard deviation ceiling or one standard deviation regression based approach coming in at around 2x of the current price. So that's where we are with Quant. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.